Okay, let's try and unpack this. You probably saw the headlines, right? Pinterest stock took a big tumble, more than 10% after their Q2 earnings came out on August 7th.
Yeah, and it's confusing for a lot of people because, well, they actually beat on sales expectations.
Exactly. It's that classic Wall Street puzzle, isn't it? A revenue beat, but the stock gets hammered. So today, we're going to try and untangle that.
Right. And for you, the educated investor, just seeing that headline, it doesn't give you the full picture.
Right.
So our mission in this deep dive is really to cut through the noise.
Look beyond that knee-jerk market reaction.
Precisely. Understand what really matters in Pinterest's Q2 2025 results, and, just as importantly, their forward guidance. We want to help you separate the beat from the miss.
Get a sense of the nuances, maybe the longer-term story.
Exactly.
And look, we're not just pulling this out of thin air. This deep dive, it's grounded in the actual sources. We've got the official Q2 earnings presentation, the press release, and a news article that covered the earnings call itself.
So we've gone through these, pulled out the key nuggets of information to try and give you the clearest picture we can.
Okay, so to solve this mystery, let's start right at the source, the Q2 revenue numbers.
And right off the bat, they posted a pretty strong top-line figure, $998 million.
Wow, okay. $998 million. That sounds like solid growth.
It is. It's 17% year over year globally, and that's on both a reported and a constant currency basis, which is good to see.
And how does that break down geographically? Because that often tells a story.
It really does. So U.S. and Canada, that was up 11% year over year.
Yeah.
Europe, up a very strong 34%.
34%.
Yeah. And then the rest of world segment, that just surged, up 65% year over year.
65. Okay, that's significant.
And what's interesting here, that $998 million figure, it wasn't just good, it actually beat what analysts were expecting.
Oh, really? What were they looking for?
They were estimating around $975 million. So on revenue, definitely a clear beat.
Okay, solid revenue, check. But a platform like Pinterest, it's also all about engagement, right? Users. How did they do on monthly active users, the MAUs?
Well, another strong point here. Global MAUs hit an all-time high, 578 million in Q2.
All-time high. Okay.
Yep, and that's 11% growth year over year.
And the geographic breakdown there, similar story.
Pretty similar trends. U.S. and Canada MAUs grew 5%, hitting 102 million. Europe was up 7% to 146 million. And rest of world again showed strong growth, up 14%, reaching 329 million MAUs.
So lots of growth outside North America still.
Definitely. And that global MAU number, 578 million, that also came in ahead of what StreetAccount was projecting. They expected about 574.5 million. So another beat on the user front.
But you know, it's worth maybe taking a quick second on what that MAU number actually means for Pinterest. How do they count that?
Right, good point. So for Pinterest, an MAU is basically an authenticated user, someone who logs in and visits the website or opens the mobile app or interacts through something like the Save button extension.
Well, at least once in 30 days.
At least once in a 30-day period, exactly. And they specifically note this doesn't include users of their separate Shuffles app unless that person also uses the main Pinterest platform in one of those ways.
Got it.
And, Pinterest themselves point out something important here. Measuring usage across huge online populations, it's inherently challenging.
Sure, there are always going to be nuances.
Right. They say these numbers are based on reasonable estimates,
Yeah.
but they're always working on improving how they measure things, so estimates can change. It's something to keep in mind.
Definitely. Still, the CEO, Bill Reddy, he sounded pretty upbeat about it.
Oh, very much so. He said he was, quote, proud of our Q2 results delivering 17% revenue growth and another quarter of record users.
And he mentioned the Gen Z demographic too, didn't he?
He did. He added, we're also excited that Gen Z has grown to over half of our user base.
Which, signals they're staying relevant with younger audiences. That's key.
Okay, so strong revenue beat, strong user beat, record users even. Why the stock drop then? This is where it gets interesting. This is likely where the miss part of the story comes in. Despite those strong top-line numbers, the news article we looked at highlighted that Pinterest actually missed analysts' expectations on earnings per share, or EPS.
Ah, okay. The bottom line.
Exactly. And often, for the market's immediate reaction, EPS is a huge trigger. A miss there can easily overshadow a revenue beat.
Right, that makes sense. So let's dig into that profitability aspect. How does monetization look? Average revenue per user, ARPU, that's critical.
It is. Globally, ARPU came in at $1.74. That's up 6% year over year.
Okay, 6% globally. But again, the regional story must be important here.
Hugely important. It really maps out where they are and where they could go.
Yeah.
So U.S. and Canada, ARPU was $7.29. It's telepowerhouse.
And that was up.
Up 6% year over year. So similar to the global average. But then look at Europe. ARPU there grew 26% year over year, hitting $1.30.
26%. That's catching up.
It is. And then rest of world. The ARPU number itself is still small, only $1.19.
Right, 19 cents versus over $7 in the U.S.
Exactly. But the growth rate there was phenomenal, up 44% year over year.
Wow, 44%. So, okay, that 19 cents sounds tiny compared to the U.S., but is that 44% growth the real story for an investor looking ahead? Does that signal massive potential?
I think it absolutely does. I mean, think about it. While $7.29 in the U.S. is mature, that market's only growing ARPU at 6%. Seeing 26% in Europe and 44% in the rest of the world, even off lower bases, that shows huge runway.
Right. If they can close that gap even partially.
It's potentially billions in future revenue. It really highlights where the future growth engine for monetization could be. Remember, ARPU is just total revenue in a region divided by the average users there. These numbers show where the ad money is starting to flow much faster.
Okay, so the monetization picture, especially internationally, looks promising despite the lower absolute numbers there for now. But back to that EPS miss and profitability. Let's look at net income and adjusted EBITDA.
Right. So on a GAAP basis, that's the standard accounting rules, net income was $38.76 million.
Which sounds... Okay, how does that compare?
It's actually a huge jump. A year ago, it was only $8.9 million. So that's a 336% increase year over year.
Whoa, okay. That's a big swing.
Yeah. And then there's adjusted EBITDA. That came in at $251 million.
Which is also up.
Up 33% year over year. And their adjusted EBITDA margin improved too. It was 25%, up about 310 basis points from last year.
And did that meet expectations?
It actually beat them. StreetAccount estimated adjusted EBITDA would be around $233 million. So another beat on that specific metric.
Okay, so GAAP net income way up, adjusted EBITDA beat estimates. This makes the EPS miss even more puzzling. But this term, adjusted EBITDA, it always comes with caveats, doesn't it? Can you walk us through that GAAP versus non-GAAP distinction again? Why it's so important for investors here?
Absolutely, yeah. It's critical. So Pinterest, like a lot of tech companies, uses these non-GAAP measures like adjusted EBITDA alongside their standard GAAP financials.
Why do they do that?
Their argument is that it gives a clearer view of the sort of ongoing core business performance. They exclude certain items they feel aren't representative of that core operation. Like what kind of items?
For adjusted EBITDA, the big ones are usually share-based compensation stock given to employees' depreciation and amortization, which are non-cash charges, sometimes payroll taxes related to stock awards, interest, maybe some one-off things.
So stripping out things that aren't direct operational costs, maybe?
Kind of. The idea is to show the operational health without, as they see it, the noise of those other items. And this is a big but for you as an investor.
Okay.
You have to understand the limitations. The company itself points these out. First, these non-GAAP numbers might not be comparable to how other companies calculate similar metrics.
Right, apples and oranges.
Exactly. And second, and perhaps more importantly, they often exclude very real recurring cash expenses. Share-based compensation is a classic example.
It's not cash out the door immediately, but it costs the company, right? It dilutes existing shareholders.
Precisely. It's a real economic cost. So while adjusted EBITDA might paint a picture of, say, 25% margin, the actual profit margin, considering all costs, including stock compensation, is lower.
So the adjusted number looks better, but might mask some real costs impacting shareholder value.
That's the potential danger. It's why you always need to look for the reconciliation table that bridges GAAP to non-GAAP. It shows you exactly what they took out. It helps you understand the gap between the headline adjusted profit and the bottom line GAAP profit, or lack thereof.
That's a really crucial point, especially when trying to square the circle on that EPS miss despite other beats. Okay, let's quickly touch on costs. They gave non-GAAP figures for those too.
They did, excluding those same types of items like stock comp. So non-GAAP cost of revenue was up 10% year over year to $197 million.
Okay.
R&D, research and development, up 16% to $209 million. Sales and marketing, up 17% to $272 million.
Lots of investment there.
Seems like it. But interestingly, general and administrative, G&A, that actually decreased by 4% year over year, down to $74 million.
Oh, interesting. Some cost control there.
Maybe some efficiencies kicking in.
Okay, so that's the cost side. Ultimately, though, cash is king, right? How did all this translate into actual cash flow for Pinterest?
Pretty well, actually. Net cash from operating activities was $208 million. That's a jump of 95% year over year.
Nearly double. Nice.
Yeah. And that strong operating cash flow translated into free cash flow of $197 million, which was up 94% year over year.
Also very strong growth.
Definitely. And they noted their free cash flow conversion, basically how much adjusted EBITDA turned into free cash flow over the last 12 months, was a healthy 92%. So they are generating significant cash from operations.
Okay, so wrapping up Q2. Strong revenue, record users, beats there, big jump in GAAP net income, adjusted EBITDA beat estimates, strong cash flow. That EPS miss hanging over things, and the non-GAAP caveats.
That seems to be the picture, yeah. A lot of positive signals under the hood, but maybe not hitting on the one metric the market focused on initially.
So what about looking ahead? What did management say about Q3 guidance?
Okay, for the third quarter of 2025, they expect revenue between $1.033 billion and $1.053 billion.
And how does that compare growth-wise?
That range represents 15% to 17% year-over-year growth.
15 to 17%. And how does that stack up against what analysts were expecting for Q3?
That's actually pretty good news. This revenue guidance tops the analysts' consensus estimate, which was around $1.025 billion.
Okay, so guiding higher than expected on revenue for next quarter, that's a positive signal.
It is. They also gave guidance for Q3 adjusted EBITDA. They expect that to be between $282 million and $302 million.
Right, but here comes that caveat again, I assume.
You got it. And this is really important for you, the investor, looking at this guidance. The company explicitly stated they have not provided a forward-looking GAAP equivalent for that adjusted EBITDA range.
Meaning they haven't shown what the comparable GAAP profit might look like.
Exactly. And they haven't provided a reconciliation like they do for past results. Their reasoning is the uncertainty and potential variability of those reconciling items we talked about, like share-based compensation, taxes, etc.
So what does that mean practically?
It means that while the $282 to $302 million adjusted EBITDA guidance sounds okay, significant changes in those excluded items could drastically change the actual GAAP profit or loss in Q3. That's a warning sign, essentially.
A lack of visibility on the true bottom line forecast.
Precisely. You have to take that adjusted EBITDA guidance with a pretty big grain of salt because you don't know what the full picture will look like on a GAAP basis. It's a critical detail.
Definitely something to keep front of mind. Okay, beyond the numbers, what was the tone for management? CEO Bill Reddy sounded confident earlier.
Yeah, he continued that theme, expressed pride in the results, confidence in their strategy. He really emphasized finding their best product market fit ever.
What does he mean by that?
He framed it as Pinterest becoming both a personalized shopping destination for users and also an AI-powered performance platform for advertisers, trying to be essential for both sides.
A very positive framing, but it wasn't all positive, was it? The CFO mentioned some headwinds.
That's right. Julia Donnelly, the CFO, she acknowledged some ongoing concerns from advertisers. Things like worries about tariffs and just, quote, broader market uncertainty.
Things they'd mentioned before.
Yeah, she said these were concerns also discussed back in May, so they're lingering. And she gave a specific example.
Oh.
She mentioned Asia-based e-commerce retailers pulling back spend in the U.S. tied to the change in a de minimis exemption.
Ah, that trade loophole change. Okay.
Right, so it shows that external factors, macroeconomic stuff, trade policy, they are still having a real impact on advertiser budgets, regardless of how well Pinterest itself is executing.
So it's a tricky environment out there for digital ads. How does Pinterest's growth stack up against others in the space, based on what the news article mentioned?
Yeah, the article provided some context. So Pinterest reported that 17% global revenue growth we talked about.
Right.
For comparison, it mentioned Snap had 9% revenue growth but missed on ARPU. Reddit, on the other hand, reported a huge 78% sales jump.
Wow, Reddit. Okay.
Meta, Facebook's parent, saw a 22% revenue increase. Amazon's online ad business jumped 23%. And Alphabet, Google's parent, apparently beat on both revenue and earnings.
So Pinterest's 17%. That's solid, but maybe middle of the pack compared to some of those giants?
It seems that way based on the specific comparisons in the article. Good growth, but maybe not quite matching the acceleration seen at Meta, Google, Amazon, or the explosive growth at Reddit in that period. Puts their performance in context.
Okay, so let's try and pull this all together. What are the key takeaways for you, the educated investor, looking at this whole Q2 picture and the guidance? It feels like a mixed bag.
It really does. I think the core finding is, yes, Pinterest delivered strong Q2 revenue growth and hit record user numbers, clear positives on the top line and engagement. Yeah. But the news highlighted that EPS miss, which likely triggered that initial negative stock reaction, kind of overshadowing the revenue beat.
And digging deeper, we saw that really impressive growth potential internationally, right?
Yeah.
Both users and especially ARPU in Europe and rest of world are growing much faster than North America.
Huge potential there, yeah. Plus, profitability did improve significantly, looking at that big jump in GAAP net income and the beat on adjusted EBITDA. Strong cash flow generation, too.
But we have to keep hammering that caveat about non-GAAP measures. Adjusted EBITDA isn't the whole profit story because of exclusions like stock-based compensation.
Absolutely critical to remember. The non-GAAP strength is positive operationally, but doesn't reflect the full cost picture for shareholders.
And the Q3 guidance. Revenue guidance looks good, topping estimates. But that lack of a GAAP forecast for profitability is a yellow flag.
Definitely. So for investors, you've got strong international growth trends and good cash flow as long-term positives. But you're balancing that against immediate market concerns reflected in the EPS miss, the ongoing advertiser uncertainty the CFO mentioned, and the lack of full transparency in the forward guidance.
Which leads us to a final thought for you, the listener, to maybe mull over. Given that strong international growth, especially in ARPU, compared to the more mature U.S. market, but also considering the CFO's comments about advertiser uncertainty from things like tariffs and broader economic worries.
How might those two forces, the internal potential of international markets versus those external pressures on advertisers, how might they shape Pinterest's strategy and how investors see the company in the next few quarters?
Yeah, what should you be looking for beyond just the headline numbers, beyond that initial stock reaction, to really get a handle on where Pinterest might be headed? Something to think about.